Hi everyone, welcome to Business Education and Research. This video presents the dividend paid by ONGC in the last 10 years. ONGC, that is Oil and Natural Gas Commission, is a central government company which is listed in Indian stock markets. We can see how ONGC could deliver the highest return to its shareholders through dividend distribution. ONGC is India's largest crude oil and natural gas company, contributing around 71% of Indian domestic production of crude oil, which is the raw material used by downstream companies like IOC, BPCL, HPCL, and MRPL to produce petroleum products like petrol, diesel, kerosene, Naphtha, and cooking gas LPG. Let us see the amount of dividend distributed by ONGC to its shareholders. The data is given from the year 2012 to 2022. This chart shows the amount of dividend per share on the face value of 5, how much is distributed to shareholders. The face value of the share is just 5 rupee. The dividend distributed to the shareholder is almost more than 5 except in the year 2018. In 2020, the company have distributed 5 rupee on 5 rupee face value, that is 100% dividend. Other than these 2 years, the company have paid more than 100% to its shareholders. The percentage of dividend distributed by ONGC on its face value of rupees 5 per share. This data is available from 2012 to 2022. As already explained in the previous slide, except in the year 2018, the dividend distribution to shareholders by ONGC is very attractive. For example, in 2018, the company have distributed 72% dividend to the shareholders. 72% of the face value of 5 is distributed to shareholders. And if you see the chart, for example, in 2012, the company distributed 170% of its face value. And in 2022, it becomes very attractive, that is 235% of its face value is distributed to shareholders as dividend. And if you see the chart, throughout the period, the company have distributed very attractive dividend to shareholders. Dividend payout ratio of ONGC, that is percentage of net profit distributed to shareholders as dividend. It's very attractive. For example, in the year 2012, the company distributed 29.63% of its profit as dividend to shareholders. It rose to 33.55% in 2013, and in 2014 also it is very attractive, it is 30%, and in 2015 again it went up to 44%, and in 2017 it gone up to 46.25%. It came down slightly in the subsequent years till 2019, but again in 2020 it went up to 67.09%. In fact, even in 2022 the company distributed 25% of its profit as dividend to shareholders. This attractive payout ratio basically hint out the company's concern for shareholders. The company wants to deliver maximum return to shareholders. That is why the dividend payout ratio of ONGC is very attractive. It shows ONGC key ratios per share. The details are given per share in terms of rupees for a period of 5 years starting from March 2018 to March 2022. The two important ratios, namely basic earning per share and book values, are given here. In 2018, March 2018, the company's basic earning per share was 17.23. That is, on 5 rupee face value, the earning per share is 17. And it went up to 23 in March 2019. Of course, it came down to 8.59 in March 2020. This 8.59 is lesser when compared to the previous years, but it is more than the face value of 5. So it again went up to 12.92 in 2021. Again it gone up to 36.19 in March 2022. So therefore, there is a steady growth of earning per share of ONGC, that is a healthy situation. And book value of the company is also very high compared to its market value at any point of time. The book value of the company was 171.14 in March 2018, and it went up to 187.79, slightly came down in the year 2020, but again started going up, and in March 2022 the book value of the company is 225.22. If you check and compare the market value and book value, always ONGC's book value is more than its market value. So therefore the investors book value, that is fundamental value of the company, is very high. Now let us see the total number of mutual funds invested in ONGC as well as the foreign institutional investors invested in the company as on December 2022. If you see the slides, the total number of mutual funds invested in ONGC is 32. At the same time, the total holdings in terms of percentage is 8.47, that is sizably very high. Similarly, the total number of foreign institutional investors is also very high, 591, and the percentage of their investments in the company is 7.76. So these data indicates the trust confidence over ONGC. That's why they have invested heavy amount in ONGC. This slide shows the comparison of ONGC with its competitors as on December 2022. So to compare ONGC with its competitors, the share price is taken, market capitalization. Market capitalization is nothing but the share price multiplied by the number of outstanding shares as on December 2022. This indicates the total market value of the company. Price earning ratio is another parameter taken for consideration. Price earning ratio is nothing but market value per share divided by earning per share. And the price to book value is given in terms of ratio. Return on equity in terms of percentage is given. Net profit is given for the total amount, Indian rupees, and net sales is also given Indian rupees, and debt equity ratio is also given. So if you see the ONGC, the share price movements of ONGC compared to its competitors, it is available in the market at very low price. For example, Reliance, the current market price of Reliance as on December 2022 runs to 2,200, whereas Petrol LNG is less compared to Reliance, but when compared to ONGC, it is almost double. So therefore, the share price movements of ONGC is less. The fundamental value is very high, whereas market value is very low, meaning it is available at very low price. So the market capitalization is given here. Say the market price, current share price of ONGC is less when compared to Petronet LNG and Oil India, whereas the market capitalization is very high. So it indicates the company's strong fundamental value. The price earning ratio is very low when compared to its competitors except Oil India. So Oil India and ONGC P ratio, price earning ratio is very less, whereas the price earning ratio of Reliance Industry is very high. So meaning to get a return of 1 rupee, you are supposed to invest 4.54 in ONGC. Whereas to get the same 1 rupee return, you are supposed to invest 23.44 as investment value. So therefore, the Reliance Industry is available for investments, but it is very costly, whereas ONGC is available for investment with very low price. The price to book value ratio is also given here. So when compared to its competitors, the price to book value ratio of ONGC is very low. Return on equity in terms of percentage for ONGC is very high. For example, it is 17.54 when compared to its competitors of 7.78. So the return on equity is very low, because the company's fundamentals value is very high and earning capacity is also very high. With less amount of equity capital, the company is making more profit. Then net profit is given here. As already said, the profitability of ONGC is very high, and Reliance Industry, of course, the profitability is very high, but next to Reliance Industry, the profitability of ONGC is very high. With less investments, less equity capital, the company is making more profit. So sales is given here. You can compare, and debt equity ratio that really measure the long-term financial position of the company. The ONGC is just 0.42. Debt equity ratio is 0.42. The amount of debt, the loans, borrowings of this company is 0.42 when compared to 1 of equity. So the debt equity ratio of Reliance Industry is also low, and Petronet LNG doesn't have any debt equity ratio details. Oil India is 0.54 and HOEC 0.47. So generally speaking, all companies' debt equity ratio is within the control.